Hello and welcome to More Software with BFCA. In this series of videos, we'll look at the Director's Loan Account. More Software keeps transactions based on movement in the source accounts. This is by far the easiest way for directors to ensure that all transactions are recorded and to produce accurate management information. There are two types of source accounts: bank accounts and Director's Loan accounts. Each source account has transactions entered against it, either as money in or money out. And on the screens for money in or money out, you can use the Switch Accounts button in order to enter transactions going into or out of a different account. At the top of each screen, you'll see the name of the account that you're entering and either money out or money in. Here's a screenshot of More Software. You can see that we're in money in for the bank current account. You can also see the option where you switch between source accounts. The Director's Loan account is not a bank account but a bookkeeping account. This account is used to record transactions with the directors of the company, and each director should have their own account. It's a very important part of your record keeping and HMRC compliance that the transactions on this account are recorded correctly. Using this account also means that the directors can efficiently manage the amount of money owed to or by the director and ensure that there's sufficient cash flow in the business to pay for the business liabilities. By making proper use of this account, the director is able to withdraw money from the company without waiting to see the management accounts at the month end. It shows how much is owed either to the director by the company or owed by the director to the company. In other words, it's your account with the company. The following transactions are recorded in the Money Out tab as paid from the Director's Loan account. Business expenses paid by the director personally, for example postage or hotels. Notional expenses claimed by the director from the company, for example mileage or use of home as office. And dividend payments. Entering these transactions in Money Out properly accounts for the cost to the business and also accounts for the fact that the director is personally owed the amount of the transaction, as it is paid in inverted commas, by the relevant Director's Loan account. This ensures that there's an accurate record of expenses that the director has paid for on behalf of the company. Expenses that the director can claim against the company, even though he may not actually have paid for them, for example use of home as office. And all amounts owing to the director, such as dividend payments, are fully accounted for each month. Using this section for recording the expenses means that you don't need an expense form. More will do all the adding up for you and keep a detailed record of how much your company owes each director. The videos in this series will show you everything that you saw on the last slide. They'll also show you how to record a payment of net wages, how to record a payment from the company back to the director, and how to reconcile the Director's Loan account. That concludes this introduction. Please now proceed to the first video in the series.